Welcome to the Safe Wheel live stream where I share my real P&L on 3 accounts and teach my proprietary Safe Wheel options trade system for free. The system is currently up just under 24% year to date. Please type in the chat that you can hear me okay. I'm going to assume that you can. And also post any questions you might have. That way I get to those questions before the end of the broadcast. I don't want to end the broadcast without answering all the questions. So first, let's get into the earnings edge. This is my account here. You can see on the screen for the earnings edge. I started with $5,000 in the beginning of the year, and I'm at 8,176. So the earnings edge has been doing quite well lately since I've changed the exit criteria over my last 6 trades. Last week I did MU and made close to $850. I think this had a break even earlier in the year or something, so that's why it's $885. It was close to $850 profit. My current overall record is 26 wins, 9 losses, and 3 break evens. And with my new exit criteria, I'm 5 wins and 1 loss, and I've made around $4,600 just on this new exit criteria. It's done quite well, much better than I expected. I expected to win about half my trades, and I've won 5 out of 6. So, this streak may or may not continue. I'm currently up 63% year to date with this system. And also, I have to say that there were a few of my students, unfortunately, that did not exit when I did. I guess they weren't around their computer, or they didn't have their notifications turned on. I'm not sure what happened with them, but there was a few of them that actually lost money on this last trade. And it was because they didn't exit when I sent out the alert through Discord. So I just wanted, full disclosure, some of my students actually lost money on this particular trade. Okay, and now let's go with the Premier Level 5. Oh, by the way, I think a majority of my students did make money on this trade. Okay, Premier Level 5, let's talk about that. And this is where we trade the options on futures. Started this account on April 8th of 2022 with $30,000. It's currently at $33,461. I hope you notice how I show my net liquidation value. Nobody else does that. And there's a reason. I mean, if you want to make realistic returns, 10% is realistically a good return. And if anyone's making 10%, they don't want to talk about that because they won't be able to, other YouTubers won't want to talk about that because that's not what brings in the new guy that doesn't really know much about trading. They want to double their account every 3 months. But, and that's the reason why you never see this net liquidation value, hardly ever, from any other YouTube instructors, because they don't want to show, number one, their losses, or number two, if they are really making any kind of money, 10% is a good return. And people don't want to hear that. Okay, but on this particular account, on the Premier Level 5, we are up 11% since April 8th. So it's based on a yearly return, it's much higher than 11%. And our lowest drawdown was about 3 or 4%. So that's really good. You only have about 4% drawdown, but you're up 11%. Those are the kind of returns that I'm interested in, that outperforms the S&P 500. The S&P 500 has been down since April 8th. It's been down 22%, and it's currently down around 14%. So we're up 11, S&P down 14. That's outperformance. That's my goal, outperform the S&P 500. Of course, there's a link in the description for both the earnings edge and also if you're interested in the Premier Level 5 system. That's the system here. It's more conservative. The earnings edge system, this system here, this is a rocky ride. You are going to, there's going to be a lot of volatility. I mean, I could lose $1,000 on my next trade. So there's a lot of volatility here. There's a lot of risk here. Um, so I just want to make people aware of that. But there's a link in the description if you're interested in this system. Okay, let's get into the safe wheel. Make sure you guys can hear me. I haven't even looked at it here yet. Okay, thanks, Charles. Um, this is a safe wheel account here. Again, up to about almost 24%. Um, you can see that I'm trading Uber, and I have this hedge here. So it's pretty much the wheel strategy, traditional, but I also am hedged. And you can see that the hedge hasn't paid out as much as the loss on the stocks, and sometimes that happens. It's not quite correlated. And when you're further out in time out here, you're not going to get quite that push compared to how much you're going to come down. And sometimes, like if I would have kept the one that was like 99 days, I probably would have been up, a couple $100 or more at this point. So you get closer to the money with your hedge, you'll have a little more depreciation, but you'll also have more movement with the price. So it's a stronger hedge, but then it also takes away from the depreciation of the wheel. Okay, so this is going to be interesting. I don't know if I've ever done this particular portion of it, of the safe wheel live. I don't recall, but we are going to layer, it looks like, or tier, put on a second tier. Well, let's take a look. So right now, what would I do? Well, first of all, last week I sold a call and I did not get assigned. I sold the $28 call. I did not get assigned, and Uber went down to $25.61. So the situation here is that I want to try to sell another call. I'm doing the wheel. Let's take a look and see if I can sell another call, but I need to do it at least at the money or out of the money. And $28 is my price. So let's take a look. Well, I'm always wanting to go into this nearest expiration cycle. So $28 calls, only worth $5, $6. I need to get at least $28 the way that I run the system. There's not enough juice. There's not, I can't, there's nothing there for me to do. So I'm going to actually start over with a second tier. Okay, so I'm going to actually put on a whole new trade. I'm going to sell a put. I'm going to start over. I'm going to sell a put, and then I'm going to buy a call. I'm going to sell a put. I'm going to go with I could go with 25.50 or the 25. I'd like to do it. I'm going to do it out of the money and get at least, $28, $25. Here's 36. I'm going to take that. So I'm actually going to put on tier number 2. So I'm kind of doubling down, kind of. You can look at it that way, but I have a hedge, so it's not that risky. So I'm going to go ahead and sell one put. I'm doing one because I have $5,000 to $10,000 in the account. If I had $10,000 to $15,000, I would do 2. But I'm going to go with the 25 here. That's pretty good premium. Let's see if I can't get the mid price is 36. Maybe I can get 37. Okay. Moved a little bit against me. Okay, filled at $35. Now I need to protect my hedge. And the way I do that is not only being long stock, because I know I'm long stock right now and that technically protects my hedge, but I also have a second tier. So I'm going to go ahead and buy a call to protect that hedge. I'm not going to pay more than $6 for it. I might get it for $5, maybe not. Okay, so I paid $6 for that. Okay, so now I have my second tier on. I'm starting over again. I still have my hedge, and I'm kind of stuck with these 100 shares where I can't get any premium out of them. And that's the problem with the traditional wheel, is that you can get stuck here and not collect any premium. And that's why we have a hedge, and that's why we have the ability to put on a second tier. And we put the second tier on very lower, so this hedge even protects the second tier even better than the first tier. Okay, so I do want to say, if you want to learn the safe wheel, of course, you can watch all of my videos for free, or you can kind of take a shortcut. And I have a flow chart, and I have the filters that I use to buy the safe wheel, and that's for under $100. And there's a link in the description if you want to just kind of jump ahead and you know, take the fast track and have everything, because I haven't gone over every scenario. Every scenario hasn't come up yet while trading the wheel, but every scenario is in that in the flow chart. Okay. Also, let's get into any questions there might have. Let's see if there's any questions I'll get into. All right. Uma, what's the worst case scenario on the safe wheel? I guess if the market, the price of the stock just continues to go higher every week, just a little bit every week, like maybe 5% every week, that's going to kind of hurt the safe wheel. But I think the largest drawdown we've had, peak to trough, is maybe 5 or 6%, and we're up close to 24%. So the risk reward is really, really good on this. And the back tests show only about a 10% return per year. So we're doing much better than average right now. Uma, why is the stock above 40 not considered? Well, it has to do with sizing. So I like to keep my size between 20 and 40, the stock price, because if it gets too high, then I'm using too much buying power per, let's say I have a $5,000 amount allotted. Well, if I'm trading a $50 stock, it's using more buying power when I can get into this second tier. And I don't want to overuse how much buying power I have. And that could happen when you get over $40. And if you get below 20, your premium typically is not enough. You're not collecting enough premium at that level to make the system worth trading, because your put hedge will probably deteriorate faster than any kind of premium you can pick up on like a $12 stock. You're not getting a lot of premium. So that 20 to 40 is that sweet spot for correct sizing. T, good morning. Good morning. Uma, can we buy a put at the money as a put hedge, or 80% is best? So 80% is best because when you start buying at the money, they depreciate really fast, and they may depreciate faster than the premium that you're collecting when you're selling the puts and the calls that are going to expire in this week. Also, the call of the $5 to hedge the hedge, can we use a longer expiration? You can, but if you use $5 in a further out expiration, you're not going to be as close to the money, so it's not going to give you that as much protection. Or you have to spend more money on the hedge. And you may want to get out of the position and start over and use a different stock at the end of the week. And if you buy a hedge that lasts 2 weeks, for example, it kind of takes that part out of the equation a little bit. So I like to keep everything liquid within 1 week. Okay, Neil says you can hear me. Charles, you can hear me. Shovel, it's time for the Cool Carl show. What's up, Shovel? Dude, indeed, Cool Carl, thank you for your dedication. You're welcome. Thanks, Uma. James, OB 500 is likely worst case. That would be 2 worst case cycles happening in a row. Lost a little bit over 250 several times with the safe wheel. Thanks, James. Yes, I appreciate that you have like real world experience and that you can chime in on that. because total newbie needs honest people like Cool Carl. Thank you, Mr. Dom. You're welcome. I appreciate that. James, most of the losses happen on the degradation of the put hedge without the call kicking in. Yes, correct. Because especially if you're not long the stock. Yeah, when you sell a put, yeah. Or a deep drop while long the 100 shares. Yeah, I would say a semi drop while the long 100 shares. If it's a deep drop, then that put hedge is going to kick in, and you should come out ahead. Okay, these guys are talking to each other. James and Shovel, what's up? Let's see, Will. This is like the third time you've sent the second set of troops in. Okay, good. I don't really think, I'm kind of straightforward. Don't really look back that much. I think maybe more, but yes, you've done it at least 2 times before. Thanks, Will, for bringing that up. So I've done this a couple times before. So obviously it's worked out well. In fact, let's take a look at something here. Then you look at Uber up $122 year to date. So Uber looks, it seems like it's a big loser and all this kind of stuff, because when you look at it over here, you're seeing like $160 down in the open and all that stuff. But actually, I'm ahead on Uber overall. Alex, with the second tier, you have almost 50 deltas. Seems like the call hedge is less necessary. That is true. It is less necessary, but you can see that one of the things I like to do is make money on this, and I'm hoping that Uber drops significantly down to like 18 or 15. That would be a nice big windfall. Okay, tangential question. I'm not sure even what that means, but what's the background theme music? It just says rock and roll. It's part of the software that I use to do live streams. They have options, and I decided to go with the rock and roll option for the background music. Thank you, Carl, for all your answers. You are welcome. And Will, is this part of the cycle? It looks like owning the stock gives us enough protection if the stock goes up without the need for the $5 call. Wondering if buying the $5 put instead for more downside protection. That would be a good thing to backtest. I haven't backtested it that way. But I always like, if we're going to get that big move down or the big move up, I want to capitalize on that. I want to say, okay, boom, that's a big, an opportunity where some big money is made. I like to be in a situation where if there's a huge move one way or the other, I can really come out on top, because every once in a while that happens. It's like an outlier move, and I want to really capitalize on that. And for $5, I think it's worth that. Okay, also be sure to hit the like button and subscribe and notification bell. If you don't hit the notification bell, you will not know when the live streams are. Actually, it would be hard to get into the live stream without the notification. Also, if you hit the like button and subscribe, it really helps out the channel, helps the channel out a lot. All right, so I don't see any other questions, so I'm going to get close to ending the broadcast unless anything kind of comes up here. So remember, as I leave, if the P&L is not real, what else are they trying to conceal? I'll be back next week.